Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse video where we discuss about what happened in the stock market last week and what could be expected next week. So, talking about the markets last week, in fact, if you remember when we were speaking last Sunday in the Market Pulse, the stock market was at somewhere in the Nifty specifically was at somewhere around 19,440, and today we stand at 19,819, which is almost a 400 point run in the last 1 week. So it was a completely positive week last week. Though it was not expected to be this positive, it is completely surprising. In fact, if you see the entire week, there has not been a major institutional purchase on any day, but still the markets have only rallied up every day. In fact, there were different stocks taking up markets at different days, but majorly last week we could say the entire markets were actually supported by the banks in specific. And in specific, if you talk about a share, a single company, that was more of HDFC Bank, showing its power as the top weightage in the Nifty at this point of time. So last week, of course, the banking sector was really good, and along with that, we could see Bank Nifty also rallying up. There was also some good support coming in from the IT sector. In fact, except TCS and Infosys also has to some extent has recovered. TCS is one laggard in the heavyweight IT sector, but then if you look at the small cap and the mid cap sector, all stocks have been doing amazingly well. Persistent Systems, Coforge, Birlasoft, all the companies have been doing amazingly well. Zensar Tech is one of our superhero, doing amazing well. In fact, Zensar Tech is close to its all-time high. HCL Tech is also coming close to all-time high. Techem slightly a laggard, but also trying to catch up. TCS has been the major laggard in the IT sector, but apart from that, all the IT sector also has been doing well. So we could say in sector-wise, if you see last week, the major support came in from the banking sector and the IT sector. There was some support from the metal sector, but that was volatile and it was up and down based on what is happening in China. So that's how the markets have kind of faced. Talking about some stocks. Talking about some stock specific news, I would say very important things to be looking at in the market. One of them would be, of course, L&T. So L&T had secured orders worth almost 25,000 crore from Saudi Aramco, and that has kind of taken L&T to its all-time high record, and it has been rallying up and up again. In fact, L&T has been a part of our portfolio since long and has delivered amazing returns as on date. We're still holding it, in fact. Apart from that, we could also see HCL Tech also securing some real good orders from Siemens in Germany, and that has actually taken HCL also up really well. HDFC Life was in news because they have actually garnered more market share in Indian market. LIC has in fact lost market share. So that is of course a positive thing. In fact, in my portfolio, I think in MPF portfolio, we are actually sitting with HDFC with more than 50% profit there. So all these things are some stocks which have actually done really well. Apart from that, some new specific stock, I would say Ashok Leyland was in news because they have launched their new EV vehicle under the Switch brand. So that has been good. Also, there were also news about the RBI actually planning to discontinue or the incremental CRR ratio, which they had actually increased earlier, to be put off in a phased manner as we go. So all these things have actually, especially the RBI news, has actually given a lot of positivity to banking sector. So banking sector has been rallying really well last week. So these were things that happened over the market days. But of course, last week, if you see, like I said, there was no institutional participation. So without much institutional participation, the market has gone up. That of course means it could be the power from retail participation. That's one. And second thing is, of course, because of a lot of derivative participation happening in Indian market. So these are things which are kind of taking Indian markets up and has been holding it up there. In fact, this is when the US market has been continuously falling. And globally, markets have not been doing great. Europe and US markets are already negative. Still, Indian market has actually done really well. In fact, US market tried to recover by Friday, but then overall for the week, they've actually closed in the red. So that's actually good sign where Indian markets are looking really bullish, where also with G20 summit going on. Probably somebody is playing or what it is. Indian markets are, of course, been positive. So that is something really good at this point of time. Portfolio is doing really well. I'm sure most of our members who are holding good portfolios in mid cap and small cap are sitting with amazing returns there. Though the index heavyweights have actually not participated. But if you see with all these things are looking great. In fact, over the weekend, there was also news that Nvidia is partnering with Reliance and Tata Group companies to bring in, work on the artificial intelligence area, which in fact has been the theme for this rally across the globe. So if that actually is, confirmed, we have to see whether things can actually look well and will the market rally further. But at this point of time, Indian market is actually close to a very important resistance level. So there's important resistance from this level, if you see, from 19,850 to 19,950 kind of that range. So this is going to be a very important resistance range. If that is broken, that is when 20,000 can happen. But then it doesn't look really practical in this week at this point of time. However, markets can never be predicted, but then I'm still not expecting the markets to touch 20,000. But however, if we look at the trades that we've taken, we've actually taken a slightly safer trade. We did hit a stop loss yesterday, but then things are still under control. So we've just moved our positions slightly higher. But this is actually a good thing at this point of time. So we might expect some consolidation after such a big rally. So initial week we can have some consolidation, but then if you look at next week, some important factor to be watching would be Wednesday, the CPI, the Consumer Price Index, the inflation data for US is coming out, and that has to be watched. And the effect of that on the market can be seen in the US after Indian market was on Wednesday. That means this week's expiry can be a little tough. So that could be something that needs to be noted. In fact, I will be looking at reducing some positions by Wednesday just to be on the safer side. Apart from that, if you look at the market, we also have the producer price index in the US coming on Thursday as well. So that is something that can be more important than CPI, I would say, because CPI is more of a lagging indicator, whereas what we can expect from PPI is the future. So that is something that I would be looking more focused on. So Thursday evening is something that we'll be looking at more focused, of course, for the US market specific. Indian market specific, there's nothing really big happening at this point of time, except of course the AI talks that's happening in the town of the partnership between Nvidia and Reliance and Tata Group of companies. However, how the stocks are going to perform based on these news is something that needs to be watched. In fact, Reliance also is sitting in a good position at this point of time because the crude oil prices have been going up. So in fact, it has come close to almost $90 a barrel, which is not really good for a country like India. Stock specific, Reliance of course is going to have a gala time, but then for a country like India, which imports so much crude oil, things are not looking great. So at this point of time, if the markets are hitting 20,000, that could happen probably because of the technical strength of the market or whatever we say. But fundamentally, when things are not great and if the market goes up, there can be a chance of a big fall. It also can happen that when things are looking great, when markets can actually start falling and trap a lot of investors who run into the market, especially when they hear the news of the markets hitting all-time high. So these are things to be watched out at this point of time. Apart from that, there was also news that I read later recently where a Russian, people have actually come out and told after the G20 summit, there was a press conference where they've told that they are looking to invest Indian rupees, which they have actually earned because of their exports in India. So they plan to invest that in India to get some good returns on that. So that also is a positive news. So for a country like India, things are looking really positive, but the only negative and the major negative at this point of time, I would say, is the crude oil prices. So again, if the crude oil prices go up, there are high chances that inflation can really go up. That is not a great thing to be looking at. Though RBI has said that if you see the CPI, which has come from India, they have been doing month on month better, but then still it is still higher than the RBI target of 6%. So which is not a great thing yet. So inflation still is not under control. RBI has of course paused rate hikes at this point of time, but if another rate hike is announced, that could actually kind of give a negativity to the market. That has to be watched out. Apart from that, US also we need to be closely watching, because what is happening with the inflation data and the producer price index is a very important focus point at this point of time, because a lot of people are expecting maybe 1 or 2 rate hikes by Federal Reserve in the US, but if it goes more than that, US can actually tip into a recession, and that can be a bad thing for the market. So these are things which can actually take the market into a dicey situation. So let us see how the markets actually react. But for this week, I am not really giving a level at this point of time, because the way markets are reacting, it's not really a good scenario. So coming to levels, I would say on the downside, probably we could limit ourselves to probably 19,500. But then on the top side, it's actually difficult to judge at this point of time. But probably to be a safer side, probably we could say 2,200 could be a safer level. But things can still not be predicted at this point of time. Fundamentally, there is no reason for the markets to be rallying up. So that's exactly why I'm not really comfortable at this point of valuation. So markets may rally, but then in such situations, when market rally, the fall can be very big. So that is something that probably we'll have to be prepared for. But for all the investors out there, I would have to say this one important thing, that is, if you are leveraged, if your positions are leveraged, that means if you're taking some fund from outside and invest in the market, do book your profits and clear up your leverages, because definitely not a good time to be holding your leverages, because the risk to reward ratio is not great at this point of time. So for new investors, of course, continue investing in SIP mode. Do take benefit of the market. I'm sure you will be making amazing returns as we go. So that's it for now. This is Srikanth Rajan signing off until we catch up tomorrow morning in the morning podcast. Goodbye. Have a great week ahead. And of course, good evening, Prof. Shivanna. Nice to see your comment there.